So, I'd like to talk today a little bit about Hasbro. And Hasbro has been in some trouble. Um, it's been a very, very rough back half of 2022, and it's going to be something that investors of Hasbro should buckle up for because Q1 is shaping up to be pretty terrible as well. And we're only a month in. So what I wanted to do is I wanted to talk a little bit about what Hasbro is and what Hasbro is not. So Hasbro is a gaming company, right? They make board games, they make toys, they make things like that, right? But what you may not realize is that 72% of their profits come from a single subsidiary, and that single subsidiary is Wizards of the Coast. Now, you might be going, well, who's Wizards of the Coast? I'm not super familiar with that. The answer is Wizards of the Coast is the company behind Magic the Gathering and Dungeons and Dragons, right? So we're sitting here and we're looking at essentially Wizards of the Coast. Like, that is the driver of Hasbro's profitability, what creates its dividend, right? What Wizards of the Coast produces is essentially the dividend that Hasbro pays out. It's a little bit, but I mean, that's it, right? And so the question then becomes, what's going on with Hasbro? So, they have been hemorrhaging money, frankly, since June. And you go, wait. Ryan, they're not losing money on a GAAP basis. They're making money. They've got a positive earnings per share. Which is true, right? That is true. Hasbro definitely does have positive earnings, and that's a good thing, right? Hasbro's got profitability behind them, and quite a fair bit of profitability. But when you look at the operational realities, what's going on with their cash, that's when it becomes a little bit more interesting, because what's happening is since June, they have had negative free cash flow, right? That's bad. That's really bad. Matter of fact, in some sense, that's a better indicator of profitability than profits, right? It's what's happening from your operations, right? And you can screw around with your P&L and push things around and whatever, but you can't really screw around with the cash. And they've been losing a bunch of cash up until June of last year. They were free cash flow positive, but since June, since when they reported their second quarter results for 2022, they've had negative free cash flow. And what we're hearing is that we should buckle up because Q4 of 2022 was pretty bad, and it resulted in them laying some folks off. Now, they won't report their actual earnings for another 2 weeks, right? They're due to report their Q4 earnings on February 16th. Right, so we'll give them a little bit of grace until then, right, is sort of the thing. Now, let me tell you what's been going on, in my opinion, with Hasbro. They've been alienating their customers. They're in a very tough spot, actually, because they're telling their customers what they want. which is a terrible place for a business to be in. And matter of fact, you know that a business is going to have problems and that there is a very good possibility of bankruptcy once they start dictating to their customers what they want. That is an almost for sure sign that the business is in massive decline, right? They are doing themselves a big disservice. So what do they do? Now, again, remember, Wizards of the Coast accounts for 72% of Hasbro's profits. So we're going to focus in on that piece because that's where the problems for Hasbro are going to be. So Wizards of the Coast, last year, Magic the Gathering had their 40-year, might have been 30, I think it was 40-year celebration. Magic the Gathering. I'm just going to look at that really quickly. Magic the Gathering, 40-year anniversary. Yep. It was a 30-year anniversary. Sorry. And you could buy a special pack of cards from Magic the Gathering from Wizards of the Coast in order to say, yes, I am a super fan of Magic the Gathering. But here's the thing. You had to buy it directly from Wizards of the Coast, and it cost $1,000. And you couldn't buy it from a game store. You couldn't buy it anywhere else, right? It had to have been bought from Wizards of the Coast's website for $1,000. And the fans of Magic the Gathering and the people who love the game saw that as a greedy cash grab. And they said, man, this company doesn't care about us. They just care about our wallets. And they revolted, right? There were boycotts. There were interesting things going on with that. And you saw that, right, in Hasbro's financial statements. Declining revenue, declining profitability, and you switched from a positive free cash flow situation to a negative free cash flow situation, right? That's going on third and fourth quarter. Second, third, fourth quarter of last year, right? Basically, the 3 quarters of the year, this has been going on with the Magic the Gathering crowd. Well, fast forward to the first part of the first quarter of this year, right? January. And Wizards of the Coast outdid themselves again, and they put in the OGL, right? Their open gaming license 1.1. And it was terrible, right? It was like in order to homebrew your own Dungeons and Dragons games, you have to license back any content that you create to Wizards of the Coast. You had to agree to pay royalties. If you made over $750,000, you had to agree that you would report making over $50,000 on anything that you created for what's essentially been an open source system for the past 20 years, right? The open gaming license was originally created in 2000 as sort of a way to foster the community growth and make sure that people felt like they could actually homebrew and create their own stuff and all that sort of stuff. And the real reason why Wizards of the Coast did that was so that they could take over the virtual tabletop games and all that sort of stuff, because they wanted to make Dungeons Dragons more of like a video game experience and monetize it like a video game with microtransactions and all that sort of stuff. Now, here on this channel, we're not fans of Dungeons and Dragons per se. I happen to play myself, but we're not necessarily concerning ourselves with that. We're looking at it from the investment side of things, right? And all of that looks good on paper, except for the community of players hated that. They hated it so much. It was brutal, right? And so what ends up happening here? Dungeons and Dragons becomes an anathema, essentially, and people start canceling the recurring revenue that they're creating for Wizards of the Coast by canceling their Dungeons and Dragons D&D Beyond subscriptions, which Wizards of the Coast owns, and they get, a couple dollars every month from all these people, right? And they all these people start canceling their paid subscriptions and leaving, and essentially boycotting the only way that they actually need to pay to play this game, right? Because what the D&D Beyond subscription does is it gives you access to all the rules in a digital format, and you get access to all of the latest and greatest content for Dungeons and Dragons that's been officially released by Wizards of the Coast, and blah 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 blah, right? For a low subscription fee. Great, whatever. People canceled like crazy. I've heard some estimates that it was up to like 40% of people that had paid subscriptions canceled, which is awful, so bad, right? And again, it's because Hasbro started dictating this is what the customer is going to want. They're going to want a better experience. They're going to want a virtual experience. They're going to want a video game experience. They never stopped to say, is that what people want? And that, again, that just screams. It screams that that this company is in decline, right? It screams that they are not listening to their customers, and they're going to go under, right? And that the company is just going to decline and decline and decline. So why am I talking about this, right? We've been talking for like 13 minutes now. So let's talk about this for a second. They've already announced that their fourth quarter results are going to be suboptimal, right? I'm guessing they're going to have a big goose egg for their traditionally best quarter, the fourth quarter that contains Christmas, Black Friday, that sort of stuff. A board game company should do pretty well, right? People should be buying games and having fun with family. It's family time, right? This is the time when these types of companies make their most money. And this company was like, And now they're going to have a big goose egg, is basically what they said, and they laid off some people. And the stock price declined, right? It declined like 8% in a single day. It was bad. It was real bad. You wouldn't expect a decline like that over the course of a year, let alone a single day, right? Here's the thing. It's going to get worse, right? They are just announcing what their fourth quarter, which is going to be their best quarter over the next 4 quarters, right? So Q4 2022, Q1 23, Q2 23, and Q3 23. Q4 is going to be their best quarter, right? It's going to get ugly. Here's the next thing. Remember all those D&D Beyond subscriptions that I told you 40% of that got canceled? That happened in the first part of the first quarter. And those people are angry. They are not coming back, right? Here's the thing. They're not going to report that until probably like April 15th, right? It's way out there. And so what's going to happen is you got a big goose egg, right, in the last couple of days, because Hasbro's already said, hey, Q4 is not going to be it's not going to look good, right? They've guided towards that. Okay, whatever. Stock declines. They're going to announce it on February 16th, and the stock is going to go down again, because that's the way the market is right now, right? They prepped the market. The market's already gone down. They're going to announce what happened in Q4, and it's going to go down again, right? But then the pain is not over. That is the beginning of the pain. Because what's going to happen is remember, Wizards of the Coast represents 72% of Hasbro's profits, right? 72%. And then let's say 50% of that is Dungeons and Dragons. It's probably much less, right? Magic the Gathering is probably way, way more profitable than Dungeons and Dragons. That's why they tried to change their open gaming license, right? Is to make Dungeons and Dragons a more profitable piece of the Wizards of the Coast brand. Okay, cool, whatever. Right? They get there, and they're going to get to a point where 20% of their profits, of their revenue, wiped out, right? If we assume that Dungeons & Dragons represents 50%, it's probably closer to 20, 25%. But you get the point, right? Somewhere between, I would wager they're going to take, Wizards of the Coast is going to take a hit in the first quarter of somewhere in the range of 10 to 20% loss in revenue and loss in profitability, maybe more or less than that, right? Depending on the margins that they're dealing with, right? Here's the deal. April is going to come around. They're going to announce that this massive decline in profitability happens, right? Prices of the stock is going to fall even more, right? Hasbro investors are in for some pain, and that's my reading of the tea leaves for this company. I'm not going to do a discounted cash flow model because, frankly, I can't, right? They're a negative free cash flow at this point. It's going to cause a lot of pain and suffering first. Okay. I think this is a stock that should be avoided. I don't think it's one that you should buy. That's my opinion, not financial advice. But when I'm looking at the tea leaves here, I'm seeing a company that's going to be in for a lot of pain for investors. And I don't think that a lot of investors realize how painful this is going to get for them. So be careful. And until next time, stay rational, my friends.